You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. For more information, please visit ftserussell.com, cboe.com, and cmegroup.com. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means it is Thursday. It is 1:30 p.m. Central, 2:30 p.m. Eastern. Do you know what's going on in these crazy futures options markets? Let's find out together. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever scintillating, ever compelling Options Insider Radio Network, of course, available on demand at just about every platform under the sun. If you want to join us live, get access to all of our exclusive shows as well, theoptionsinsider.com/secret club. Remember, it's a secret, just me and you talking here. And of course, however you listen live after the fact, keep sending in those questions, those comments. We love to hear from all of you guys and gals out there. And of course, if you like what you hear and you're on the on-demand side, keep throwing those reviews in there. These are troubled, turbulent times. People are discovering the content and discovering these markets just about every day. So it helps them when they go to a platform like an Apple Podcasts or a Stitcher or a Spotify, whatever they use. If they see some nice reviews of you folks, it does help them beat a path to our door. And more of them are doing so pretty much all the time out there these days. So keep helping them out if you like what you hear. And let's see who's joining me on the old TWIFO program today, holding down the CME Group and FTSE Russell hot seats, doing double duty today. It's our old friend, Mr. Todd Colvin, the Senior Vice President of Global Institutional Sales and Business Development over there at Ambrosino Brothers. Todd, welcome back to TWIFO, sir. It has been too long.
Mark, good to hear your voice. Good to be here. Thank you for having me on. It's been one of those roller coaster weeks.
Yeah, you picked a good one.
There's a lot going on. You know, we saw the move up pretty much ahead of the Fed, and now everything's kind of come back down to earth a little bit, or some have come back down to earth. But it's been a volatility heavy and a week when you talk about the Fed and what they're planning on doing over the next several months.
I want to get into all of that, but you kind of just touched on it right there. It's your first time joining us this year, and of course, a lot's popping off this week. So before we even get to the movers and shakers and everything else, I just got to know really quickly, I'm sure a lot of our audience does too, walk us through what this week has been like. You come in, of course, for most of the major equities. We'll get into the Fed and everything else in a second, but just purely from the major equities perspective, you come in on Monday, NASDAQ's off, 4.25%. It reverts almost entirely by the end of the day. Next day, we see a repeat, a little bit, not as dramatic, about 2.5% or so, but still a complete reversion pretty much. Today, flipping that script up 1+ to 2%, and then giving all that back and turning to the dark side now. So it's been I think topsy-turvy is putting it mildly this week, Todd. Walk us through what's been going through your mind as you've been seeing all these whipsaws, sir.
Well, I think you came in on Monday and it felt like a preservation of capital type of trade. Let's take some profits. Obviously, if you've been in the stock market, for a week, a month, a year, you made some money. If you were in there coming into the end of 2021. Likewise, there's a lot of things happening this week news-wise. So you wanted to kind of maybe balance your portfolio, maybe take some of those more risky chips off the table. That's the way it felt. That reversal that we saw on Monday was quite incredible. You see the Dow down 1,000 or 1,100, whatever it was at the worst. And then you look up again and wait a minute, that just got all disappeared. There must have been some very, bullish buyers out there. And that's exactly what we had. And now it becomes more about forward guidance. You get through these earnings seasons, you get through the Fed, you get through some of these other news stories, and the stock market will calm down. It's not going to be like this every week, but to see it open up the way it did on Monday and trade that way was very exciting.
Yeah, these last couple of years, January has come in like a lion and just really delivered some shocks to the system. Of course, last year, this time, we were in the middle of the meme frenzy. The year before that, of course, we had madness afoot in January as well. Not as much as when we got into March, but still intriguing stuff nonetheless. As we keep on rolling, it is time, listeners, to break down the movers and shakers.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers Report.
All right, everybody, welcome to the Movers and Shakers, the portion of the show we break down everything moving to the upside, a.k.a. the light side, and to the dark side over there at CME this week. Todd, you know the drill. I will give you pride of place. Where should we begin our journey this week, sir? To the light side or to the dark side?
Mark, let's take a walk down the dark side. Let's do that.
I like it. I knew you had a red lightsaber there, Todd. So let's do it here. Dark side we go. An intriguing mix on both sides this week. In fact, if you look at the report, listeners, CME shares are right before showtime. We always retweet it. It's kind of an even split. The biggest movers are to the dark side this week overall, even though we have one good popper on the upside. You probably can guess which one that is, listeners, but intriguing stuff. But otherwise, net numbers wise, it's pretty much evenly split 50-50, light side to dark side. To the dark side, we go first. Number 5 is the NASDAQ, the E-mini NASDAQ, off nearly 4%, 3.83%. It's actually outpacing the Russell 2000 right now. Russell 2000 is only at number 9, off about 2.4%. So intriguing stuff. The equities feeling some heat right now. Number 4, Palladium. Back in the Palladium side, 5.51% before you get excited again. Not a really huge option story there. Number 3, the old Eurodollar is off 9.02%. It was number 1 to the dark side last week. Number 2 is Bitcoin, off about 14.3%. We all know crypto's been under fire of late. We have a great question of the week going right now over there at Options. You guys can play along if you haven't done so already, asking you if this recent sell-off in crypto across Bitcoin, ETH, and everything else, has that caused you to change your outlook on crypto for 2022? Yes, no, or you're not trading crypto right now? So far, it was pretty much resoundingly no coming into showtime, right around 52% of you saying no. So intriguing stuff. Get over there at Options. Make your voice heard if you haven't done so already. And number 1 this week, once again, it's back to the top of the list. It's lumber, dead trees, taking the top spot, kicking crypto to the curb. 16.64%. Dead trees, one of the hottest commodities on the planet last year. Certainly one of the most volatile. And it was number 5 last week, off a paltry 3.17%. Now, to the light side we go. Number 5, soybean oil, up 2.4%. It was number 3 in the same direction last week, up 6.81%. Number 4, rough rice, up 2.44%. Number 3, it's RBOB, up 3.03%. Number 2, heating oil, up 3.16%. And number one, yeah, you probably guessed it. It's Nat Gas. Dan and I were talking about this last week on the show and saying, it's kind of weird because last week it was off. It was number two, the dark side, off 10.89%. And he and I were both kind of scratching our heads saying, what we're seeing from a, macro and geopolitical environment doesn't seem to be jiving with these sell-off numbers. I know Dan didn't want to stay on the show, but I'm sure Dan had some upside in Nat Gas. That's paying off this week, up 15, nearly 16%, 15.94% out there in Nat Gas. We're going to get to all things energy and everything else. But Todd, I know you're a rates guy, a lot of rates action lighting up the tape this week. So let's head out to the rates first.
The Fed, the yield curve, inflation fears. How are they impacting options activity and volatility in your favorite interest rate products? Let's find out as we explore the world of rates.
All right, everybody, welcome to the world of rates. A lot of action out there. Speaking of action, actually, CME just putting out their year in review numbers for 2021 and some of their most active options products. And go figure, a lot of them are in the rates, listeners. In fact, the big dog is still Eurodollars leading the dance, the highest ADV or average daily volume for any product at CME last year, listeners. 1.059 million contracts. E-mini right behind it, E-mini S&P at 701,000, followed by the 10-year note, 633,000, and then the 5-year note, 160,000, and then the T-bond coming in there at number 5 there, 129,000. So of the top 5, you got pretty much all rates except for the E-mini. Right behind it, you have corn at number 6. So, and then number 7, WTI, number 8, nat gas. Let's do the whole top 10. Number 9, soybeans, and number 10, gold. So that's your top 10 most active options products out there. But Todd, you're a rates guy. Obviously a big week for rates. We've been waiting for Powell and company to kind of give us the rate increase signal for a while. We finally got it this week. Walk us through what you thought of what they said and what they're doing and what you're seeing out there in the market, sir.
Well, yes, we did hear from Dr. Powell and company this week, and it looks like they're going to start to, what I'll say, normalize policy come March. And that was not a surprise to the market at all. But over the last, I'd like to say it's only been the last several months, but it's really been the last several years. You've seen this bearish sort of play, a lot of put buying, a lot of put structured buying, a lot of downside for rates to go higher. And clearly since March of 2020, rates really haven't done a whole lot. We've seen a few fluff moves higher in the back end of the Treasury curve, but nothing substantial. And finally, I'll say, Mark, those put buyers got paid this week. They got paid. They've been getting paid this year, I should say, with the moves that we're seeing in the short end. Eurodollars is no exception. We've seen Eurodollars moving around. So those that have been buying those 20 and 30 delta puts that have just been getting crushed, they got paid this week, especially when the Fed announced they're going to actually raise rates, and the market's now implying, several rate hikes in 2022. So that's a good thing if you've been owning puts and put structures, something you haven't felt in a long time.
Yes, you're right, Todd. And there's a whole complex we could dig into. Obviously, the 10-year is pretty active, Eurodollar, a bunch of them. Which product should we sink our teeth into first in the rates complex, sir?
I think the Eurodollars is the most interesting because not only are we seeing exiting, so we talked about the negative Eurodollar vol that we saw week over week, it's a lot of it's rolling. So now you're going to be seeing a lot of new put positions being put on even lower with the idea that maybe this could have some teeth. We had some strong growth numbers this morning. The Fed has a lot of inflation that they need to fight over the next coming, call it 12 to 18 months. There's a lot of opportunity there. However, if those growth numbers don't sustain, the Fed could be finding itself between a rock and a hard place. You can't raise rates if you don't have the growth to support it, even if inflation is running at 7 to 8%, which it is. So at this point, I think the Fed is going to be raising rates in March, and then we're going to kind of take it meeting by meeting. There are some more aggressive positions out there that would suggest they're going to go quicker, but we'll have to wait and see. And right now, it's all in the Fed's ballpark, but I don't even know if they really have the roadmap drawn out beyond mid-year of 2022.
Well, let's get out into the Eurodollars and check for ourselves. You guys know where to go, listeners. To generate these reports for yourselves, not just during showtime, but all week long. They're firing 24 hours a day, 7 days a week. CMEgroup.com/TWIFO or /TWIO. Both of those will get you where you want to go. Then go to that drop down, go to the interest rates in the asset class category, then head on over into the euro dollars. That'll get you where we want to go. Just be careful. There's a lot of data here. You could easily drown in this much paper. Speaking of paper, I said the ADV was about 1 million. They're laughing at that this week, listeners. Over 5 million contracts going up in the euro dollars. Obviously a big week for all things rates. 5,054,000 to be precise out there. So a pretty active week, to put it mildly, out there. One of the interesting things about euro dollars is a lot of the paper is kind of spread out. So you don't see, like in the S&P, for example, you don't see 35% of the paper in the contract that's going away in one day. Nothing like that. It's a much more, shall I say, egalitarian product in terms of how evenly spread the paper is. The most active contract we have this week is the June contract, with about 17.2% of that 5 million contracts going up in the June contract. Let's hang out there first. If you're wondering, by the way, euro dollars right now at about 99, almost 99 and a half in that front future, going out in about 15 days, or a little bit above the 99 level if we go out all the way to June, about 99 and an eighth or so. And we're looking at, by the way, I love the fact that euro dollar is still in eighths and 16ths. Brings me back to my old SPX days over there on the SIBO. All right, let's go on out here to the vol. If you're wondering, vol-wise, got some juice. You know, Treasury is not known for being the most active, the most volatile complex, but euro dollars kind of belies that. 52, almost 53 right now, 52.86. It's up nearly 7 handles, about 670 from this time last week. So vol actually coming up. Usually you see the event in the rates case is the Fed announcement. And yet we didn't see the vol come off. We're seeing the vol continue to percolate and get frothy out there. Skew-wise, last week, the puts, 3.6% bid to the at-the-money. This week, 4.5% rich. The calls, nobody really was interested in them last week, only 1.4% bid. And this week, 2.3% cheap. So the calls have swung a little bit. Not a huge change in the calls. It's really more, it looks like the puts remaining firm out there. That is the story of the week. But you know what? I said the most action was in this June contract, but we actually have to go back to May to find the number one most active hot contract this week. And that was the 99 and 1/16th. I love these strikes. 99 and 1/16th put, doing 166,000 contracts. Pretty much all of that opening. The big day, listeners, was Wednesday. 93,767 contracts going up on Wednesday. 85,000 of that was opening. So, wow. And then 56,000 today. I mean, you're talking just one day more than you might see in a lot of other complexes we will see all week, you know, just in one day, in one put in the euro dollar. So that's some paper out here, listeners. Behind that, we go back out to the June contract, the 98 and 15/16. I love these strikes. They bring such a smile to my face. 98 and 15/16 in the June contract. That was pretty active. But even though today was the big day, of that 99,000 contracts they did this week, let's see, 63,500 going up today, 22,000 on Tuesday, 4,500 on Monday, 9,500 on Wednesday, back and forth, opening to closing. Obviously, we don't know what today's numbers are opening or closing wise. Interesting that this one would have such a different pattern. You know, I expect Wednesday to be the heavy day for these, but not in the 98 and 15/16 puts. These are active today, not Wednesday. Interesting stuff. Let's go a little bit farther out to see if we see any other interesting. Looks like we got 98 3/4 puts going up here in September. 90,504 times for those as well. So again, it's kind of scattered paper all the way through. And in fact, it looks like actually right behind it, I missed one. Here we go a little bit farther out. You go all the way to March here, and you got the 98 quarter puts, did about 120,000 contracts this week. So that's what I mean by the paper is scattered all over the place here in the euro dollars. Listen, we could spend probably the rest of the show mining just how many months and how many series are active out here in the euro dollars. Todd, do you have a lot of euro dollars traders over there at Ambrosino Brothers, or are they mostly hanging out in the other rates products?
No, we do a lot of euro dollars over here, and this is really a play on Federal Reserve policy. This is a play on the short end, and this is the most liquid contract on the planet. So you can get in and you can get out, and you're not going to be taken for a ride. This is this has always been sort of the the creme de la creme of where to go when you want to trade Federal Reserve policy.
This is the last of the Mohegans when it comes to quoting in 16ths and 8ths. So
it is, but and obviously that we're going to be rolling a lot of this into the up and coming SOFR futures and options product here at the CME Group. But right now it is still LIBOR where they are hanging their hats, and they will continue to do so for probably at least the first half of 2022. And then we'll probably start to see a roll into the new SOFR product, which will then take center stage in some point in 2023. So a little ways out.
Since it's such a big rates week, let's do a double hit out here. Let's go out to the 10-year as well. Todd, anything catching your eye out there in the land of the 10-year this week, sir?
Well, I'll tell you, the 10-year is very interesting because while we have been watching the short end see rates being implied moving higher, the 10-year did see yields move higher as well, but not as significant. So we continue to see what we call the yield curve flattening. We see 2s, 10s in about 14 basis points this week. At this point right now, the Fed does not want a flat yield curve. They want a positively sloped yield curve because the fear of inversion will then creep into their upcoming policy meetings, and that is not a friendly place for them to be. So right now in 10-year, while we continue to see put buyers and we continue to see, structures for yields to go higher, they have been stubborn to do so, especially when we take away the Fed buying. They're going to remove their tapering. They're going to look to unwind their balance sheet. And if the economic data can support it, 10-year yields should be going higher along with inflation. But we just haven't seen that correlation like we're used to historically.
All right, let's dive out into the 10-year, listeners. Stay in that. Rates drop down. Just pop out of Eurodollars, go out to 10-year. You'll see it's no slouch itself. 3.03 million contracts already on the tape right now, listeners. And of that, a little bit more concentrated, not as many months and strikes in series in the 10-year as there are in the Eurodollars. So about 60% is going up in that March contract. That goes out in about 22 days. So that's actually fairly near dated paper, all things considered, for the 10-year. And in terms of vol, this is getting back to what you normally may perceive as rates type vol. You're talking about a 5, a little bit under 5, 492 right now, off about a quarter of a point. So that's probably what most people associate with rates when it comes to volatility, not the 50 plus we're seeing out there in the Eurodollars. In terms of skew wise out here in the March contract, the puts last week, 1.6% bid this week, nearly 5%. So as Todd was talking about those puts earlier, those puts getting juicy out here, comparatively speaking, at least in the 10-year here, and nearly 5% bid this week, 4.9% bid. Last week, the calls were, nobody wanted to touch them. They were about negligible, 0.3% cheap. This week, 4.1% cheap. So the calls coming in pretty aggressively, and the puts getting bid up pretty aggressively in this March contract. And in terms of the action, I said about 60% of that 3 million contracts going up in March. And the big dog this week, listeners, with 363,000. My goodness, that's as much as some other whole complexes. Forget about products. You might add up all the metals and not get 363,000 contracts. That'll get you to the 127 even puts. Pretty active all week long. Obviously, the big day was Wednesday for this one. 189,000 contracts going up on Wednesday alone. Looks like that was biased towards the selling side. The rest of the week, pretty active. 74,000 going up today. 55,000 on Monday. 46,000 on Tuesday. So we saw opening position going into the Fed announcement on Wednesday, then a lot of closing on Wednesday. Obviously, we don't know about today's number from an OI perspective, but pretty active stuff here, listeners. Number 2 is also pretty active. 188,000 of the 127 half puts. By the way, the 10-year coming into showtime at about 127 and a quarter or so. So kind of splitting the uprights there between the 127 and 127 half puts. 188,000 of the 127 half puts going up. The big day was, strangely enough, Monday. 61,500 going up on Monday, 52,000 today, only 41,000 on Wednesday, so a little bit of a change of pace there, and 33,000 on Tuesday. Same deal from an OI perspective, opening earlier in the week, closing on Wednesday, and again, we don't know what's going on with today's paper, but again, a lot of paper hitting the world of rates. We could probably hang out in rates for the rest of the show, but there's a lot of stuff popping off here, listeners, we have to get to, so let's keep on rolling into the equities.
It's time to explore the volatility swings, skew changes, and hot options trades in your favorite indices. It's time to talk equities.
All right, everybody, welcome to the Equities. You guys have been paying attention, listening to the shows all week. You know it's been a topsy-turvy week, to put it mildly, out there. A very aggressive reversion on Monday, one of the most aggressive we've ever seen. Similar reversion there on Tuesday, and we have another reversal going on as we speak. We were rallying this morning. Now we're in the teeth of a sell-off yet again. So, Todd, I guess it doesn't matter where we start the day this week. We will end up somewhere dramatically different, sir, in the equities.
That we will. Equities have been on a roller coaster ride. You know, you watch in a declining market, volatility historically tends to bid. And as you move faster to the downside, which we sat front row for this week, you start to see volatility hit some levels. But on those bounce backs, volatility can go down almost as quickly. It has a very short memory in the equity markets. And while it didn't reverse all of the volatility that we saw pumped into the market on Monday, it could have been a lot worse, I guess, from a vol perspective if you were short coming into this week. And volatility, obviously, when you see all these new all-time highs from 2021, volatility tends to get overlooked because we don't get those significant pullbacks, which are the reason why we see volatility bid. So at this point, the pulse of the market is going to remain elevated, not only because of the Fed and the uncertainty of where they may go, but now you've got earnings season. And while earnings have been coming in, you get some good, some bad. The forward guidance is very unclear, and that's not a good thing for anyone right now. And so volatility is going to remain bid, in the equity markets relative to what we saw all of last year.
Let's get out and here, break it down a little bit. Of course, when you're talking equities, the flip side of that coin is vol, as Todd was just mentioning. And vol up firmly from where we were this time last week. Remember, this time last week, we're just coming into the start of the sell-offs on Friday. There, a lot of people were spooked going into the weekend, but what's going on in Ukraine, and the Fed, of course, was looming on the horizon. And of course, we came in selling off even harder on Monday, transfer all the way to Thursday, and we're still very volatile. RVX, which is the VIX of the small caps, at about almost a 37 when we kicked off the show, listeners. That's up 7.6 points from this time last week. VIX cash back in the 30 handle again, listeners, about 32.5 when we kicked off the show. That's up over 10, about 10.3 handles from where it was this time last week. We got as high as about 38 and change back in the teeth of the sell-off there on Monday. So threatening a 40 handle. A lot of people thought we might get there. Didn't quite get there this week, but pretty darn close. And who knows if today's not done yet. So we shall see. VVIX, which is the volatility of volatility, at about a 145 almost coming into showtime. It's up 21.5 points from where we were this time last week. Those are kind of getting into teeth of the pandemic type levels again of vol, listeners. I see VVIX getting up to those levels. You have to pay attention. Things are getting frothy, to say the least. And vol Q, which is, of course, the at-the-money vol of the NASDAQ 100. The NASDAQ's been leading us in both directions, to the upside and to the downside, and in reversing all throughout the week. So NASDAQ vol pretty frothy right now as well. 33 and about a third on the vol Q. It puts it up 8 1/3 handles from where it was this time last week. It puts that VIX to RVX spread actually tightening up. I think that the fact that VIX is actually kind of almost catching up a little bit to RVX, tightened up that spread a bit, because we're at about a little bit shy of 4.5. That's about 2 2/3 points tighter than it was this time last week. Usually we see a little bit wider spread there. VIX to vol Q at less than 1 right now, 0.85. That's about 2 points tighter than this time last week. So VIX kind of popping, but vol Q obviously also popping, keeping that spread pretty tight. It's been that way for a little while now. I have to get Scott Nations back on one of our shows to kind of parse that. Obviously, vol Q is his product, because there have been a few times now where we've seen no difference at all. VIX and vol Q trading at about the same level, which is interesting. So fascinating stuff to watch. Speaking of fascinating, you folks have clearly been sinking your teeth into the equity products over there at CME. CME announcing right before showtime that this week they blew the doors off their previous records for equity index futures and options. They hit a new single-day trading record of 15.85 million contracts on Monday. Go figure, it was Monday that did it. That beat the previous record of 15.6 million contracts set, get this, listeners, February 28th of 2020. So that record has held since the onset of the pandemic pretty much, and they beat it this Monday. So crazy, perhaps disturbing numbers on that front. Same deal on the micro E-mini futures. They reached a record 6.571 million contracts on Monday. That's across all 4 of the micro E-mini products there. That beat the previous record just set earlier this month. Obviously, these are newer products. They weren't all around at the beginning of the pandemic. But that previous record was 5.1 million contracts set on January 21st. So they blew the doors off that as well. So interesting stuff afoot out here. Let's go on into the equities. Let's start, because we were just talking RVX, let's start in the Russell 2000 land. Almost 50,000 contracts on the tape already. So that's a pretty robust week here so far in RUT. By the way, Russell 2000 back below the 2000 level. I heard from our old buddy, Mr. Sean Smith, this week. He reached out to me when it broke back below the 2000 level. Remember, that was such a psychologically important level for everybody when the Russell 2000 surpassed 2000. Now back below it when we kicked off the show at about a 1929 and change out there, off nearly 3% just since Monday, or about 56 handles. And as most good equities are wont to do, of that about 50,000 contracts, 23% of it going away in a day. So we're not going to hang out there. Instead, we're going to go a little bit farther out. Let's go out to the, looks like the Feb week 3 contract has about 22 days to go. That did about 20% of the paper this week. If you're wondering vol-wise, it's at about a 36.5, which lines up actually nicely with RVX, which makes sense. RVX is about a 30-day measure. We're going out about 22 days. So they should be somewhat close. In terms of skew, by the way, that vol up about 2 3/4 points. The skew-wise, the puts last week, 14.2%. Bid this week, 12.3% bid. Puts coming in. That may surprise you, but then again, as we're blowing through strikes to the downside, that's what we normally see from a skew perspective, listeners. Barring some aggressive shock like on Monday, if you're seeing repeated sell-offs or slow sell-offs and then reversals, you're going to see those puts come in. That's why we say if you're paying 25% over the at-the-money vol premium levels to hedge yourself in some of these indices, you might want to rethink that, because it doesn't really work out that well unless you have an extremely apocalyptic event. So right now, those puts coming in, they're down to 12.3% bid over the at-the-money vol. That's, again, roughly half of the premium levels they were trading at not too long ago, at least from a net premium over the at-the-money vol perspective. All right, let's go out to the most active contract this week, and it was, I said we're at about a 1929, almost 1930. It was the 2215 calls, doing well over 2,000 contracts this week. So you guys are always asking about the smaller delta calls. These are fairly small. Let's see what was going on out here in these, listeners. Looks like paper trading about 1,000 of them on Tuesday, then taking a lot of them off on Wednesday, 1,000 again. So interesting, back and forth on the 2215s in one day. That's strange. Maybe betting on a little bit of had some aggressive reversals this week. So I don't think we got to the 2215 level, but maybe betting on some of those bounces and then taking it off when either they didn't get the move they needed, or maybe they got some of the move they needed enough to take those off and live to fight another day. Speaking of another day, let's head on out to the E-mini really quickly as well. S&P, that's how I know a lot of you are hanging your hats these days, and the E-mini putting up some numbers out there today as well. So far this week, listeners, 5,050,000 contracts on the tape. So the E-mini threatening the big dog, the Eurodollars out there this week in terms of numbers. And of course, 32% of that is going away tomorrow. So 32% of your 5,050,000 contracts, I should say, are going away tomorrow, listeners. Let's go a little bit farther out. Let's go to, again, week 3, Feb, that has about 11% of the paper. We can go farther out. That gets to the March contract. That's a little bit too far out. Let's keep it in a few weeks out at least. Let's go to the week 3. Feb has about 11% of the paper this week. That's still a ton of paper. You're talking 5 million contracts, listeners. And I said we're at about a 43.21.5 right now in the E-mini S&P. And let's see, the vol out there in that contract, 28.12. It's up about almost exactly 3 points from this time last week. A little bit shy of their VIX levels here. Remember, VIX also takes into account call skew and put skew out there. So that could play with those numbers a little bit. In terms of the skew, speaking of which, the puts this week, 20.4% bid. Last week, 18.7%. So unlike the Russell 2000, we're seeing some of those puts. They're coming in, but not coming in perhaps as aggressively as we're seeing in the rut. The calls last week, 14.3% cheap. This week, even cheaper, 17.8% cheap. And the most active contract, listeners, once again, I think it's these crazy put sellers out here in the front contract, because it's the 3,500 puts. That does line up with what we've seen. They usually 600 to 800 point out of the money puts are what some folks are just harvesting all day long. And looks like they did it again this week. 3,500 puts trading pretty actively, but the big day today, 48,510 of these going up today, and 17,000 on Tuesday, 10,000 Wednesday, 8,000 on Monday, pretty much opening every day. So there's opening garbage put paper yet again, listeners, dominating the tape here in the E-mini S&P 500. And number 2 right behind it are the 3,600 puts. So maybe some vertical action there, but still, you got to go pretty far to find any really meaningful strikes here. Listen, let's look really quickly. It's pretty much a lot of this garbage. We've got 52,000 of the 41 half puts. That's about as close as we get. You're talking about 170 points out of the money there. So those actually are reasonable. They're going out tomorrow, so probably not going to see that, but still intriguing stuff. 52,000 of those. So potentially some vertical action, even though it doesn't look like it lines up that well. So yeah, 3,500, 3,600, and 41 half puts leading the dance here this week in the E-mini S&P. Let's see if you can find any more, dare I say it, relevant contracts. If you like a little bit of upside, 40,000 of the March 45 halves have gone up this week, listeners. Pretty much all of that on Monday, 27,000 on Monday, and then the rest kind of scattered throughout the week, a total of about 39,000. So 45 halves, if you like some pretty far upside there, 45.50. Again, that wasn't that far ago. We were bouncing around levels like that, but that looks kind of optimistic now. Most of that opening this week, so opening upside paper on the 45. Also, the 4,500 is going up this week too, so it might be a bit of a vertical, or perhaps looks like maybe a bit of a strip. 4,500, 46 halves, and 4,600s, all, and 44 halves, all doing 22 to 27,000 contracts on Monday. So we talked before how people like the ladders and the strips out here in the futures options. Maybe some of that going up here this week as well, because the paper is all opening and all oddly similar from a overall volume perspective out here. Todd, anything catching your eye this week in the good old E-mini S&P 500, sir?
Well, I think it makes sense. You talk about those low put strikes being sold. The significant level in the S&P right now, 4,200, and that has not been breached. So I think at this point, despite the free fall that we saw earlier this week, looking to maybe pick up some premium down there. Put skew remains very elevated, whether or not it's through record levels or whether or not it's back at those levels we saw back in March of 2020. It is still elevated and remains there. And the term on these obviously plays a significant part of that when you only have to hold them for a short period. So not really surprised at this point. Calls have typically been good sellers for core positions. If you're a core long stock, you want to sell something, take in something to maybe pad your investment portfolio. Selling calls has been one of the most popular ways to do it, especially over 2021 when the market just didn't know how to go down. So at this point, equity volatility will remain elevated, though, as I said, because of the fact that we are entering sort of a new phase. Now we're going to really start watching the Fed. We are going to start watching what's going on over in Europe. We are going to continue to watch the economic data. And again, if we don't see those positive growth numbers continue, that is going to be a wrench in the plans from the central bank. And that's something that equities can deal with a lot. We've seen that over the years. But an uncertain Fed is something that equities do not like, and that would bring in more sellers and obviously jack up more put skew.
And where there are not many sellers to be found right now, listeners, it's in nat gas. Let's head out to energy next.
It's time to tap into the deep options well of black gold, Texas tea, nat gas, and more. It's time to talk energy.
All right, let's get to it, listeners. Drop down back out of equities and go right into energy. Scoot on over past WTI. Get out into the big mover and shaker this week, which is nat gas. You remember, listeners, last show, Dan and I were kind of scratching our heads. It seemed strange that nat gas was selling off as hard as it was, given all the other factors at play out there in that market. This week, it's like they listened to us, because nat gas up 15.15%, just since Monday. If you go back to our last show, obviously it's up nearly 16%. So yeah, action afoot out there. And it's trading more like an equity. It's all front month action right now, which again, there aren't a lot of weeklies to be had in nat gas. So that's probably one of the reasons why we're seeing that. People want to get very close. They think something could pop off at any moment over there in the Ukraine. If that's the case, you want to have some high gamma contracts on. So it's that front contract, front month March that's doing the lion's share of the business, nearly 40%, 38% of a pretty robust week, 334,000 contracts. Again, 38% of it coming in that March contract. By the way, this futures curve looking a little backward now in nat gas, which is interesting. I kind of expected that coming in, and also seeing all that front month paper. So that probably alludes to the fact we're going to see a little bit of juice in that front future as well. But that might make it interesting for some of those ETFs out there that are always rebalancing all the time. Maybe we'll get to that a little bit later in the listener questions here. But about a 435, and that front future you get out into April, it's at about a 425. So slightly backward, but interesting nonetheless. And in terms of the vol, what is the vol out here in nat gas right now, listeners? If you said a 65.2, then you are A, oddly precise, and B, the winner chicken dinner, up about 13.3 points just this week. So yeah, nat gas getting frothy again. Puts and calls, let's see, skew-wise, last week the puts were 6.9% cheap. This week, nobody wants to touch them. 10.6% cheap, so getting cheaper. The calls last week, 11% cheap last week. This week, only 6.6%. Coming in a little bit, again, as we're blowing through some strikes, you might expect that there. Let's see. In terms of most active contract this week, listeners, looks like it's that front month March 5 even call, doing 15,600 contracts this week. So you kind of had to expect some upside dominating the tape. Almost half of that, almost 8,000 going up today, listeners. 7,700, 3,000 yesterday, 3,300 on Tuesday, only 1,500 on Monday. And it wasn't unanimous. It was back and forth, opening and closing all week long. So it wasn't like people were just pouring into and opening the fives all week long. And then right behind it, we have the 3/4 puts doing about 12,200 contracts. The big day was Wednesday. Actually, the big day was today. I take it back. 6,700 contracts, 3,500 on Wednesday, 1,300 on Tuesday, and about 600 or so on Monday. Then right behind it, we have a close fight between the 4/2 calls and the 3/2 puts. 4/2 calls at about 11,700. Again, the big one, the big mover today, 6,600. So over half of that paper going up today, 4,000 yesterday, and then the rest kind of scattered throughout the week. And then about 11,000 of the 3/2 puts have also traded this week. Again, the big day today. Today's the big mover for nat gas. 5,400 today, 2,300 yesterday, 2,800 on Tuesday. Again, a lot of these, the 3/4 puts were opening all week long, but the rest of these, and so were the 4/2 calls. Everything else was kind of scattered, opening to closing all week long. Let's look really quickly to see if we see any other interesting plays. Yeah, the 5 calls were kind of the strike and option du jour on pretty much every month here. It was popular in June. It was popular in July. We got August, all 5 calls across the board. You don't normally see people loading up on the 5s in August in the normal seasonal cycle of nat gas, but that kind of shows you where we're hanging out right now. 4/2s also pretty active in Jan of next year, 4,700 of those going up this week. So kind of an intriguing time. Todd, I know you spend most of your time looking at the rates and equities and some metals, but energy is kind of on everybody's radar now, in particular nat gas. I'm sure your phone's ringing off the hook over there at AMBROSINO Brothers saying, what the heck is going on with this nat gas market? Weird sell-off last week, kind of the expected rally we got this week, but a little bit later maybe than some folks thought. What are your thoughts on this crazy market these days, sir?
Well, yeah, that weird sell-off last week. It's we're still in January here in Chicago. When I got out to my car yesterday morning, it was right around 0 degrees. So there in itself is an inherent bid to nat gas. The fact that wintertime is here and it's going to be cold. I think when you add in the geopolitical issues that you mentioned earlier, that only sweetens the pot a little bit, so to speak. And I think at this point, nat gas, has a limited life cycle in the winter. Obviously, when you get out into the summer and fall, it doesn't have the same volatility that we see in the winter. But when you throw politics into anything, it can really mess it up. And I think right now, looking at those 5 calls, those have got to be a very popular place to be right now. Clearly, the market has the ability to get there at the blink of an eye, and clearly, the market seems very much concerned about the kerfuffle going on in Ukraine, as well as the fact that last I checked, for the last 4.5 billion years, we've had a cold winter in Chicago. So those combined should keep nat gas, pushing north.
All right, Todd, we got time for one more complex. Where should we go on our journey next, sir?
Let's get over to the metals.
Metals. How did I know you were going to pick that list? All right, here we go. Metals up next.
Werewolves beware. It's time to explore the options activity in silver, gold, and other shiny things. It's time to talk metals.
All right, listeners, welcome to the metals. Go back to that drop down, pop out of energy, go over to metals. We're going to hang out in the precious. We did have palladium moving to number 4 on the dark side this week, off 5.5%. Kind of a dark side week, mostly across the board in most of the precious metals that you folks trade. Todd, what's catching your eye and lighting up your tape out there in the metals this week, sir?
Well, I go back to gold. It's it's old faithful, so to speak. Gold had made a very impressive run amidst a lot of the chaos that we've seen over the last several weeks. We saw equities getting hit. We saw treasury prices going lower. We saw cryptos getting crushed. And lo and behold, our old friend gold was up about 5%, leading the pack, albeit that was up until 2 days ago, because a lot of that changed over the last 2 days. What took 2 weeks for gold to get from 1,800 to 1,850, it has pretty much erased in the last 2 days. So gold can be a little bit slippery. Many believed it to be sort of the Fed mistake put, as you were, if the Fed made a mistake at their meeting or maybe gave a bad outlook or something, that was where you saw some defense. And clearly the Fed did not do that. And gold is now at the wrath of the Fed, and we see gold prices coming off. So I think at this point, gold will still be a good barometer, but has sort of lost a little bit of its luster that we saw over the last couple of weeks.
Let's get out there to the gold. By the way, listeners, a pretty active week for gold, as you might expect. 211,000 contracts on the tape for gold right now. That's pretty robust. That's about 10x what we're seeing for silver, which is about 22,000 right now. So a lot of paper going up in gold. It's a Fed week, so it shouldn't really come as too much of a surprise. Gold right now shy of the 1,800 level, 1,795, listeners. And of that 210,000 contracts or so, about 37%. So unlike an equity, which is all front loaded, gold going a little bit farther out, going out to June. 37.5% is in the June contract. What is gold vol right now in June? It's at about a 14.5, almost. So up about almost half a point this week. Gold vol not known for huge explosions. It can move, but when it does, usually those spikes are kind of short lived, and we'll see if this little half a point bump can be maintained out there. In terms of skew, last week the puts were kind of negligible, almost unched to the at the money. This week they're about 1.5% rich, so not a lot of love for the puts. Last week the calls were 3.1% bid. This week 6.3% bid. So calls getting a little bit of love out there. And in terms of the action this week, it was all about the calls. It was the 18 quarter calls out here in June that were leading the pack by a country mile, doing 30,000 of these bad boys going up this week. Also looks like the 1900s did about 15,000 and the 17 halves did about 15,000. Looks like we got a 17 half, 18 quarter, 1900 fly going up. People love their upside flies in gold, and we saw another one going up for about 60,000 contracts this week, listeners. That's pretty sizable. Looks like a lot of that was actually coming off. So this was, and on Monday too, which is interesting, they're taking it off ahead of the Fed announcement. That's interesting. Usually you put something like that on and maybe you want to keep it to get your Fed announcement, but maybe they wanted to get the heck out of Dodge before Powell and company spoke. So that was kind of the big trade of the week, unwinding that 75 point wide fly there. Again, total of 60,000 contracts, so nothing to sneeze at there. Outside of that, we have to go back to, looks like the big dog are the 1,900 calls here in March, doing far less, about 5,000 contracts. The big day is actually today, about 1,800, 1,400 on Wednesday. The rest kind of scattered throughout the week. Most of that opening out here. Also had the 18 halves doing about 4,200 contracts this week. So kind of a mixed bag out here on gold, kind of all over the place. But we do usually look for our longer term flies and upside plays, and we did see some of those. But most looks like it was closing paper this week. And if you're a little bit on the dark side in gold, someone putting up about 3,000 of the 1,500 puts in December. Listen, they traded actively 1,000 each pretty much every day this week except Monday. And looks like a lot of that was closing every day. So maybe someone winding down their 1,500 put position in Dece of next year. As we have to keep on rolling, listeners, time to get some of you on the show. It is time for your futures options feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/theoptionsinsider, stocktwits.com/optionsinsider, or via questions@theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's MIXLR.com.
All right, everybody. Welcome to the Futures Options Feedback segment. We're kind of coming up against this. We probably only have time to get to one of these. So, Todd, I will allow you to choose. Do you want to talk about your favorite trades for a rising rate environment, futures, options, margining, or nat gas ETFs, sir? The choice is yours.
Let's talk about favorite trade.
I had a feeling you'd go for that. Let's go to this one then from Francis. Francis wants to know, what's your best trade right now for a rising rate environment? Obviously, Todd, we got what we expected from the Fed this week to kick off to this rising rate frenzy we may expect to see, maybe a little bit less so if this sell-off continues in the S&P. But, we're seeing people asking about Rho and everything else, which are, of course, the options Greeks that have to do with rates. So everybody has rates on the brain again. Todd, what are your thoughts? I'm sure you're getting calls like this a lot over there at Ambrosino. What are your thoughts for Francis and everyone else out there who wants to know, what are you looking at in this rising rate environment, sir?
Well, two things. Here at CME Group, we have these weekly options, which allow you to put on positions for specific events, like, say, a Fed meeting or an unemployment report or a growth, the GDP level. Those are still very favorable if you have a sense or you have a gut instinct as to where you think the numbers are going to come in. Otherwise, I like the longer term look here because I think, as I've said before, I don't think the Fed has this all drawn out. I think it's going to be more of a moment to moment type of strategy for them to normalize policy. Yes, I do believe rates are going higher ultimately, but I do believe it's going to take some time. So I like to look at some deferred put structures that maybe get us back to 2% in the 10-year. I think that they're going to struggle to get through 2% without some kind of positive news and without some kind of aggressive Fed action. So at this point, that's where we're looking, maybe somewhere out in mid 2022. And that would kind of pin you sort of at that 127 strike that you had mentioned earlier. And that's kind of lines up nicely with that 2% 10-year yield.
All right, listeners, that music means we've come to the end of another epic journey through the world of all things futures, options. We talked energy, rates, metals, equities, as much as we could squeeze in here, rising rates, trades, all sorts. I know you guys have questions about nat gas and stuff. We'll try to maybe squeeze them into other shows this week because it's a topic on everyone's mind and it's a product a lot of people are watching. I know we probably do the show for 4 hours every week of all the different products you guys want us to feature. That said, if you have a product you think we should talk about on the show, hit us up. Let us know. You know where to find us at Options on most of the major social media platforms. Questions at theoptionsinsider.com also works. And for those of you in the Secret Club, you can always ask us live there in the chat. And Mr. Todd, if our listeners want to reach out to you, they have questions about rates or equities or anything else, where should they go? What should they do?
I can be reached at Twitter at TJC1539. I'm also available at Bloomberg, TCOLVIN, the number 14, at Bloomberg.net.
There you go. The second mention of Bloomberg here on the network this week. You guys are going to start picking up Bloomberg terminals next over there. And, of course, you know where to go to find all these reports and a whole bunch more. CMEgroup.com/TWIFO, TWIFO, or /TWIO. Both of those work. Those should take you to the dark side of the TWIFO reports. Just bear in mind, there's a lot of data there. You can be analyzing trades for days. So bear that in mind when you head over there. And of course, you know where to go to learn about all things going on in the world of small caps. Are they rallying? Are they selling off? What's going on with the vol and recon? How is this whole COVID thing impacting small caps versus large caps? They have all of that and a whole bunch more. FTSERussell.com, FTSE Russell.com is the place to go. Give them a follow while you're there as well on the old Twitters at FTSE Russell. All one word. We got to get on out of here, listeners. We'll be back again tomorrow to break down the insane week that was and indeed still is from a vol perspective. Are we rallying? Are we selling off? Looks like Dow's green again, so all's right with the world again. Who knows? It's one of those days, listeners. Will it continue tomorrow? We'll break down the insane week from a vol perspective tomorrow. Volatility Views, noon Central, 1 p.m. Eastern. Then back at it after that. Options oddities. Was there some odd analysis and odd trades to discuss? Yeah, there were a few this week. So we'll get to all of that for all you Secret Club folks on Options Oddities tomorrow, 2 p.m. Central, 3 p.m. Eastern. Then we all kick it off again on Monday with the option block all the way through to another Thursday, another episode of This Week in Futures Options. Stay safe out there, everybody.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This Week in Futures Options is also brought to you by FTSE Russell, a leading global provider of benchmarks, analytics, and data solutions. Investors in the U.S. and around the world are using FTSE Russell indexes to benchmark their investment performance and create investment funds, ETFs, structured products, and index-based derivatives. Many Options Insider Radio Network listeners will be familiar with the Russell 2000 Index. Russell 2000 futures and options are currently trading on the Chicago Board Options Exchange and CME Group. For more information, please visit FTSERussell.com, CBOE.com, and CMEGroup.com. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.